Something massive is happening with CoreWeave stock. I think that we're getting to a critical level with the sell-off, and I'm going to share it with you in this video and why we may potentially see a bounce sometime soon according to the charts that we can see. This is in accordance with my best stocks to buy now for Q3 2025. And I will also give updates on Restoration Hardware and Etsy in this because I think that they're both at critical moments in their development with the momentum shifting into the right direction that we could see some massive upside during this time. By the way, if you guys want to see more of these technicals, I'll share them out over at the Discord. Links down in the description. Code word doctor when you sign up, when you join the thousands of community members with the team of experts that's over there, which I'm one of, where you can get access to live trading. You also get buys and sells, you get technicals, you get news, information, and Ask the Expert channel as well. Make sure that you sign up for the earner tier so that we can help support you in your journey towards financial freedom and building alpha in your portfolio. So without further ado, let's get into CoreWeave, and then we'll also talk about Etsy and Restoration Hardware. So popping this up here for you. What the heck? Let's go to CoreWeave first. That's the most exciting here, but then the other two I think are wildly worth watching. So CoreWeave hasn't been on the market since that long. So right now we're looking at the daily chart. We're on Friday. And that is March the 28th is the day that we have here on the chart. And you guys can see the sort of sell-off that it's had after just a rampant rise that took us all the way up to $187 after we opened up. The opening price on here is $39. That is a wild outperformance. And then where in the heck is that top going to come in? Well, we certainly found out where it was. And I do have some technicals that go along with this as well. If we put this up here, you can see how knotted up over the short run that we had. We had there's a 1, a 5, a 1, and a 2, all sorts of Fibonacci extension values that all point to this as the zone where we're going to cause that turnaround. But that doesn't happen in isolation. What we also had, if you go all the way back to the peak that we had on the 21st of May, and then check all the other peaks down here along, and I'm talking as per the RSI down here. So this peak for the 21st of May, the peak that we have the 27th of May, the peak that we got on the 4th of June, and then finally this peak down here on the 20th of June. All of those are dropping peaks. That is in divergence with the price action that we see rising here. We'll take down the technicals. Price action going up. We'll put a nice little trend line on here, an array. There we go, so we can just see what that looks like. And let me do a better job at taking down those technicals so you can see them. There's the array that we have. And we're gonna make it fatter, and we'll also turn up the opacity there. There we go. So there's the price action that we have. Price action up during that time. And when we look at the momentum down here, we actually have that momentum decline over time. And as we start to drop out from these, being able to hit overbought territory, showing just significant strength from a momentum standpoint, as we start to lose that, when we can't get back up in there and we start to get that first real drop in momentum that takes us down below these previous lows that we had from the 29th of May all the way through the 13th of June, when we actually put in this low here on the 25th of June, that's a bit of confirmation that things are going to slow down and turn around. Plus, from the moving average standpoint, you can see that we start to lose the 5, the 13. We also lost the 20-day, and this thing sells down. Well, this is the critical moment here because we are right at the 50 EMA, SMA. We're just north of those two values, which happen to be around $120 per share. And that also coincides with the fact that over here with these candles that we started peaking out back in the end of May, the high prices on here, 125, 123, 130, but with a high wick on that. And these last two are opening values that we ended up closing lower on those. And so we had difficulty there. And then you can see with the green candle afterwards that breaking that was a very significant thing because that allowed the rest of the run to happen. Well, now we're back towards that significant area. And even though it was resistance before and then broken, it was very solid resistance. Well, that should turn into very solid support as well. So putting the Fibonacci extensions back up here for a moment. There we go. Let's make sure that those are visible. Make sure those are visible. You can see that we start to get some pretty darn massive support in here, although we've fallen through it so far, but there's more of it from 114 to 119. But let me take down those for a moment, and we're going to make a different drawing because there's more massive things that have happened. So one thing with a stock that's like this one, that's brand new to the markets just this year. There we go. Make sure that the magnet tool is on. We're going to click on this peak that we formed. We're going to click on this low that we formed following it, and then this final peak that we got here. And what you can see up here where we have all these together, this is from 0 to 1. That's 100% of the movement. That's the same movement that was made back here starting April the 2nd until we got to the bottom on April the 21st. that's 100% of the movement. Well, look where we're at. The whole Fibonacci values are what follow for the Fibonacci extension. That coincides with the top that we see here. It also coincides about with where we closed right here for this as well. And it's just north of those 50 periods. So we might have a little quick shakeout, fake out moment, and then touching those 50 period EMA, SMA, maybe we start to turn things back around. One other thing that I want to show you while we're still here on the daily chart, let me hide that extension for just a moment and we'll put up a Fibonacci retracement instead, because this is another massive thing that happened. From the bottom to an actual confirmed peak on this thing, you can see that we punched through the 23.6. Once we broke that, we had a big old fall quickly to the 38.2. Well, if we get support here, we get a peekaboo moment, push back through the 32 and have it as support, then we know that our next price rise is on. Pulling back to the 50 or the 618 are the big ones. So the 0.5 or the 0.618 Fibonacci levels here can also be times that are absolutely critical for turning around. And what we want to do is we want to watch and see, okay, when we find where that floor is, because right now it is a falling knife. We don't know exactly where the floor is. When we start to see signs of where the floor is, it probably will closely associate with one of these three levels that we see in here, 128, 110, or 92. We already broke down through and closed below 128. So we want to start looking, okay, maybe 110 is going to be that time, or if we don't make it that far and turn 128 back as support, it really does matter. This is a matter of testing floors and ceilings. Right now we tested this floor and it failed. So now it's like, okay, well, is it still a ceiling for us then since we fell through that floor? Think about a tower with multiple levels in it that you fall through the floor of an upper level. Well, then when you look up, that's now a ceiling in the current level that you're currently in. So right now that 38.2 is a ceiling on that one. So I'm going to drop down to the 4-hour chart on this real quick, and I want to pay attention to the RSI, because when we look at the RSI on this, and I'll stretch it out so you can see it, look how massively oversold we are on a 4-hour basis. We're down at about 16.71, so we could see a near-term bounce coming for us for CoreWeave sometime in the near future. So I think that that is absolutely important to watch and keep in mind as we go through and we see the development for CoreWeave from here. I think this is one that's been a little bit unfairly beat up, even though it may have been a little bit unfairly to the upside, but we should be paying attention now to CoreWeave. I think that when this thing does find bottom, that we're going to have a wild opportunity on the bounce back to the upside, and that's going to be once again another critical moment. Once we find that bottom, we're able to confirm it, then we can get another Fibonacci extension on there and look to see back to the upside. Okay, well, where can this thing go from here? So going out to a weekly basis, I mean, we barely have an RSI on this one. Looking at this, we actually just jump right into overbought territory and sort of selling off a little bit. I'm going to get rid of this trend line that's here because it doesn't make a lot of sense in this view. But that is just a wild sell. After we had an indecisive candle, a further confirmed sell from here. So right now we're in selling territory, but once again, we want to watch for where that floor is, because we're likely going to find it soon, and it's likely going to happen at one of these Fibonacci values that I have on here. So as low as 92, as high as 128 is where we're going to find that floor coming in for us. And one thing about 0.5 that intrigues me, first of all, it's a pretty rapid sell. We're probably going to see it. That's my guess. We have the 13 period on the weekly chart here. You can see it in the back, CRWV 1W. So CoreWeave, and then the 1 week per candle that we're looking at right now. Not only do we have that 13 period there, but when we go back to the daily chart, that would put us just south of where we find those 50 EMA, SMA. So I think we'll come down here. We might just touch that. Monthly chart's not very interesting right now, just because there's been so few months, so little data to actually point to at the moment. It's not really all that worth looking at. And that's one of the things that makes CoreWeave a little bit more volatile, is because there are so few technicals that are actually available on screen to deal with, to plan with. You got to go down to the shorter term ones until the longer term ones establish themselves. So if I were to put everything up here, it gets a little bit messy, but you can see all the chop that we have between now all the way down to that 0.5, and then we hit a big old pocket, an empty gap here. If the 0.5 fails, I think the final straw, the biggest place that we're going to turn around is going to be a wild opportunity from here, is if it pulls back to the 618. So I get excited as we start to get back down into the 90 to 97 level, if we in fact see that. But once again, I want to remind you, I'm not saying we will, but just from the Fibonacci extension we were most able to establish, from the peak that we had back in April to the low to the most recent peak that we have here, we're sitting in pretty solid support territory right now. The 0.5 is also going to be very critical to us for a bounce. The ultimate turnaround spot, if we make it that far, is in that low $90 range. So guys, I'm going to move over into Restoration Hardware. I'm also going to move over into Etsy. I've covered these before as my best stocks to buy now for Q3 2025, possibly throughout the end of 2025, giving us outperformance to what the market can return to us. It already has outperformed the S&P so far, but it's a matter of, okay, can it do it over the entire quarter? Can you do it as a swing trade? Now, mind you, none of this is financial advice. This is what I'm looking at and sharing my ideas with you. It's still up to you to do your own due diligence. If you guys want to see all of these, the technicals, buys, sells, and not just my buys and sells, not just my technicals, not just my news and information, but the entire team of experts that's available over at the Discord. Once again, the link's down in the description. Code word doctor when you sign up is going to save you 50% off your first month sign up. And you can check it out for less than $1 a day. And you're going to find that the information over there can return to you in dividends by the information, by the opportunities that are sold. And if you need to increase your skills as a technical trader, increase your skills for technical analysis, increase your skills by learning about options, there's some coursework through Stockmo Academy that's also available down in the description as well. Code word doctor when you sign up is going to give you a massive discount on those courses. They're a one-time fee, lifetime access course. If you bundle the two courses together and code word doctor, that's going to get you the maximum savings and the best deal possible. And these courses are legit. They are tight. I vetted them myself and I stand by everything that's in them. They are small, easy to digest, easy to understand. And there's a learning community that goes along with them as well. It has its very own separate Discord where you get to ask your questions and the nuanced ideas that you have and make sure that you understand it right. And then you can also take those things and put them into practice directly as you learn them and find out just what exactly they can do for you in building more alpha in your portfolio and also helping you in your journey towards financial freedom. Guys, let's get into those other two stocks. So Restoration Hardware, let's go with this one. So gotten beaten up over time, and this one worries me a little bit because you see this big long sell, consolidation period. If we were to break to the downside, that would be a much further sell. Now, mind you, I think for Restoration Hardware, that could lead to significant opportunity, but I will say if I unhide the technicals here, that's not currently what's being suggested because with this consolidation period, we're actually breaking to the upside currently. And as we break out of this, now mind you, Friday was a bit of a kind of day, but we'll look at other things besides just this top trend line here. We do want to stay up above this. I have a price target on this at $340 by the end of 2025. I think we can see it. There's potential that we see it during Q3. We'll have to watch and see. So from this technical, this consolidation pattern over here, this distance is what sets that price target that's over there. And so we'll have to watch and see what amount of time it takes us to get there. If we are going to get there, there's never any promises, never any guarantees, and it's just far too complex to say. But I will say outside of the formation that we have, what else do we see? Well, we freshly have the 5 over the 13 and the 13 crossing over 50. I can't overestimate how important this is to see the 13 cross the 50. The RSI is at 58.73. So we got bullish movement from the EMAs. We have bullish momentum from the RSI as well. And if we go out to the weekly chart to see how we're positioned there, we are trading above the 5 and the 13, which is huge. We don't have the crossover yet, which is good because that can be an early sign of bullishness. We have a lot of low bottom wicks indicating buying pressure coming in on a weekly basis. We have some chop to overcome. You can see over here that we got buying pressure before, but now that's turning into selling pressure. That's because the floor became the ceiling for us. We got to be able to break up over that. Trading above the 5 and the 13 is good. The RSI is rising, but not yet bullish, which means that we could still be early on this. Got to be careful not to try and front run the markets, but so far it's moved up beautifully during this most recent move. Getting that 5, which is green, the green moving average here to cross the yellow is the first sign that we're looking for on a weekly basis. And if we go out to the monthly chart on this, we're getting just the slightest indication as per the RSI that we're starting to rise again. It's not a confirmed rise until after we overcome some of these previous peaks that we had. And what's probably going to happen first, if it does happen, is that we'll get the crossover the 50, which would still put us into bullish territory anyway. The biggest major sign that we want to watch for on a monthly basis is this 5 EMA, which is in green right here. We've gotten rejected off of it and traded below it for a while now. As a matter of fact, we traded below it going back to February, then April, February, March, my goodness, April, May, June. I promise I know my months of the year. And then finally in July, we still got rejected off of it. So that number to break is about 218.49 as of the market close on Friday. If we can get on top of that 5 month, that's going to be huge because we haven't done it. Riding on top of the moving averages is bullish. dangling off the moving averages, especially the 5 like this, is a bearish thing, but we're starting to get some indication that we're starting to turn that narrative around. We have to get on top of the 5 EMA. Going back to the weekly chart, we got to get the 5 to cross the 13. We're trading above both of them. That's a good sign. We need to get that RSI up above 50. Going back to the daily chart, we have the early bullish signs, but we are in an overall bearish trend as we're down below the 200 EMA. We're also down below the 200 SMA, which are at 255 and 293 respectively. And it also looks like this 100 period simple moving average that's coming down along here also was a point of rejection for us as well, which could lead to that next big thing to watch for. I will tell you that trading above this blue 20 period that we have on here that has crossed over the 50, that's a big thing. We could see a reversion to the mean, getting up above the 100 simple moving average, and then also getting the moving averages of the 20 and the 50 to cross that as well. Those are also bullish signs if we can get that bull crossover heading back upward. So it could be early for restoration hardware, but I do think that now could be that time that we start to see that turnaround. And then finally, my friend Etsy, looking at the monthly chart here, we'll work our way back to the daily. The RSI is starting to rise for us for Etsy. And on a monthly basis, that can signal a much longer term trend. So we have confirmed higher values so far than what we had previously over here. So starting to rise, and we also have a higher low there. So the momentum is confirmedly building for Etsy. And that's a good thing to see that momentum build, but it still is bearish by any number of metrics that we're looking at. But this is about doing a reversal and getting outsized gains. So there is a bit of risk because it would be against the trend, but it could be that now's that time that trend starts to reverse. So we are trading right now up above the 5 and the 13, but we need to get the 5 to cross the 13, just like what I said with the restoration hardware. But the fact that we're already trading above them, if July can put in for this candle a close up above that 13, it hasn't done that for a long time. Yeah, we traded above it in June, but man, we ripped back down to sell beneath it. Now we're getting another shot, trading back up above. We want to get that cross of the 5 and the 13. Let's drop down to weekly, where we are bullish as per the momentum. We actually are trading above the 5 and the 13. The 5 crossed the 13 going back to at least the week of May 27th. The 5 is above the 50. That's this red line that's right here. That's another bullish sign. The next big thing, and it could be coming in the next few weeks here, is that we get this 13 to cross up over the 50. That is another sign that we're advancing with the momentum and that we're getting further bullishness with Etsy stock. If we drop down to the daily side of things, we have the 5 above the 13. We have almost the 50 over the 200 EMA. That golden cross is a beautiful thing to watch and see. And if I put up the simple moving averages just for a moment, we actually already had that golden cross moment in the near term. Let's see where our price action is with the candles. We are just freshly above. I made 67% on an options play on this trade right here that you see. As a matter of fact, if I held on to it long enough, that thing would have 3x just in that single day when I had bought it a day or two prior. It was absolutely incredible. So anybody who followed me in that trade through the Discord made bank on that one. I made bank. I could have made a little bit more, but I was traveling that day, and I thought 67% up. I'm going to take it because I can't actively trade it. Anybody who was actively trading it probably would have hung on a little bit longer. And the technicals on this thing, you can see that we were getting right into resistance for that one and exactly why we hesitated. But as per where this thing could go, the price target on this is absolutely massive from where it sits right now. We actually have a descending wedge pattern on this one. You can see it with the trend lines here. And we actually just broke out of it. We retested it. And now we're on the way back up. This thing could be showing us $85 per share based on this formation that's been developing since late 2023 and finally broke out of it in June of 2025. So about a year and a half or so, I'm just going to estimate in the making for this thing to finally break out of this pattern. 85 would be to the north side of that. 70 is going to be tough to break because it's one of our essential Fibonacci levels, and there's also a Fibonacci extension level that's in there besides the retracement. But 85 is what this pattern suggests. We'll see if we can get there from where we're at right now. That would be significant upside. So guys, I'm very excited. CoreWeave, I think we could see a bottom in that sometime soon. I'm not in CoreWeave, but I'd like to be. And if I want to get into it, especially from a technical standpoint, I'd like to see it around $90 because I think the rip from that would be absolutely massive and outsized in its movement, assuming that the rest of the market bias was still there to support such a big movement. We need to see continued strength with the NASDAQ 100, with the S&P 500, the Dow Jones, and also the Russell 2000 can actually be a really good canary in the coal mine as per the indices with those small caps because it's going to move in outsized ways. So when things are looking really good for the markets, it should outsize, it should outperform the S&P and the NASDAQ 100. When things go a little bit bad and we have a little bit of a worse day, it should move in an outsized direction downward from it as well. So that is a nice early risk indicator. The crypto market could be another place that you look at. That's for another video for another time, but right now that is on fire as well. So that can indicate to us that risk assets are where it's at, and we're risk on until the market starts to signal to us that we're risk off. And right now we don't have any confirmatory evidence that we're about to change direction, but it'll be a knee-jerk moment when it does happen, and then we're going to have to adapt and change as that comes along. And if you guys want to see that adaptation, if you want to see moving along with it, how to rotate through that, come on over to the Discord. The link's in the description. Code word doctor when you sign up, like I said. And if you want to learn more about the technical analysis that's here, or how to produce it yourself, how to trade using technicals, how to trade using options, you guys can find that coursework through Stockmill Academy. Once again, code word doctor. It works for the Discord. It works for the coursework. And the discounts are different based on which one it is that you sign up for. But when you do the Discord, make sure you choose the earner tier so you get unrestricted access to everything that's offered to the community members that's over there. Guys, thank you very much for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you next video.